What's up, guys? Welcome back to the Accelerated Weekly Training. Let's just go ahead and go over the disclaimer. Today we're going to be going over mean reversion, and we're going to talk about exactly what that means and how it affects our trades. So just real quick with the disclaimer, as usual, take a second to read over this. You can pause it, and just know that this is just for financial education and essentially entertainment, that there's nothing here that I'm recommending as far as any specific asset purchase, trade, investment, whatnot. So that being said, let's switch over to the good stuff. All right, so like I said, so we're gonna be talking about mean reversion today. So exactly what that means is that when we have a move that is sustained in a specific direction, right, especially moves that accelerate and get kind of out of hand, but we see it everywhere, right? You could call it a pullback, you could call it a reversal. Essentially what it is, it's a price, it's price moving in the direction of the trend, and it's coming back down towards the essentially the mean, the average, towards value, right? As price moves and changes value, as value, say, moves higher or lower, price can get ahead of where the value is actually established itself, right? So that is what we see in the markets here when we see price move away from a trend line and move back towards it, right? And so those various different levels of the steepness of those things will have a direct impact on that, right? So let's take a look here. So this is the NASDAQ. This is the beginning of when things started breaking down into the technically the bear market, right? And so we saw price have this consolidation here and break down, right? So you can see here, you can draw an imaginary trend line through here. As price broke that, and then price continued to the downside here, a new trend line was created. But so what you see is that price moved to the downside too fast, got overheated, and price moved back higher, right? It's like a rubber band, right? It's like the way that volatility works. So it moves and there's excursions away from the trend and then back towards it, right? So that's what we're looking at. And what that means for our trades is, if we're looking to get into the downside, right? This is a bear market, so we want to be focused on the long trend at hand. If we want to be going to the downside, we don't want to be getting involved and getting in a rip your face off bull rally that's coming across, right? So we want to be paying attention to what's happening, where the momentum is, where it shifts, and be getting in the trend at an opportune time, right? If we can help it. Okay, so again, price moves away from the trend, comes back up, trend line, back down, trend line. Now, I'm not saying that this is just constantly respecting the trend line. That always happens. It just happens to be a tendency. It's a good point of support or resistance, whether it's price is going to the upside or price is going to the downside, that price will tend to come back and check that area out before it makes a decision to go in a different direction, right? So, and then we see here where essentially a poor low was made. Price wasn't able to break down through the previous lows at all, and then it rejected higher to the upside, right, into which a new trend line was created. So, but again, price got ahead of where value was, where essentially people determined value was. That, in combination with news and other things that happen, right, can change value of something, perceived value of something can change overnight. If all of a sudden, you know, a stock and its opportunity signs a contract, a deal with a major conglomerate, you know, that's going to boost profits by tenfold, right? Boom. Price immediately goes higher because the value proposition has changed, right? So that can change in an instant. But when we're looking at trends, we can't overguess what we think is going to happen. All we can do is rely on what we see and what happens in the news and whatever else, right? So again, we see price move with the trend, come back down, comes and tests the trend lines here, right? And so it's broken through this trend line, as this trend line was steep, right? So it comes back up to the more slighter angled trend lines, which have a more of a longevity to them, right? They're not indicative of an extreme market. They're just indicative of the a typical sellers being in charge of the market, right? So as we see selling wane, we should continue to see this kind of balance out in the meantime, right? I would expect that we'll probably at a certain point, we'll get another move to the upside like this, before we potentially move back down to the downside. Okay, so what we can do here in conjunction with this is we can use VWAP and we can use market profile to essentially gauge the value proposition and see where we're at and see what's happening, right? So let's take a look at this move here, right? Okay, so we have a steep move away from the trend line, and it pops back up through that area there, heads back to the trend line. And so what do we see? Right? As price moves higher, value begins to shift, right? Instead of the previous day's value, price being rejected lower away from that in the direction of the trend, we're actually seeing that trend reverse, right? Where it's actually the previous day's value, things are rejected higher, right? As we turn into a counter trend. So that's what we see here as we're looking at the market profile, is where you can see the point of control and the value areas and how when it's tested those previous areas, it's rejected to the upside, right? So what do we see here? And this is about the same. You can't see the trend line on this specific screen, but when price comes up and it tests that trend line, what do we see? Our second indication is, all right, well, what is price doing? And what are some other signs and cues and clues that happen once we hit that resistance level? Does price consolidate as if it's going to break through? Does it start to reject value higher and start to move to the downside, right? So that's what we see, right? We see that the point of control was established almost near the high of the day here. And then we had closed around here, opened here, and then price became, price started to be rejected from value to the upside towards the point of control, and then ultimately we rejected back to the downside, right? So we switch over to the 30-minute chart, and that's exactly what we see here, right? Price accelerated, price was moving to the upside, then it accelerated to the upside. As we bumped into that trend line, we broke the initial trend line acceleration here, showing that momentum has reversed in a fairly significant way. There's first indicator, hey, that the uptrend could be ending or is having issues, right? We come back down. This is the main trend line that we're watching here. That's important. This is the one that's been established from the beginning. This is the more sustainable trend line. And so as it comes down here and it's unable to get back into the highs and breaks down lower and essentially continues the trend lower. So that's just a quick snippet of some things that I look at whenever we're looking at a mean reversion move, when things are moving against our trend or against our trade, and we're managing the trade, and a way that we can either get back in if we've already taken profits, or a way to establish a trade if we haven't done so. So anyways, hope you got some value out of that, and happy trading. See you next time.